Good morning, traders and investors. Dale Sarker with the Trader Boys. This is gonna be an interesting day. I love these days. S&P down 82 points right now. 82 down 2.5%. Nasdaq down 178, only 1.7. But look at this guy right here. The Dow Jones Industrials down 850 points, down 3%, and the stock market's not even open yet. And we got the Russell 2000 down 4.5. Man, this thing is just leading the way down. Oil taking a big drop here, $2.30 down, 6%. You can see this is kind of moving right now. We're coming into 8:30 when things start to get really interesting. So, and gold is up 0.5% at 9 points up. So you can see here that all the big Nasdaq names. You've got Apple down $6.50. You've got Amazon down here $66. Right? And down the bottom here we got Tesla, right? just down $36. So and big moves to the downside, 3.5%, 2.5%, 2%. So this is the retracement that we've been talking about for last week. It's happened, it's taken place. We're still in an uptrend. So you're gonna see the VIX. The VIX will be rising today as the markets drop here, and I got some call options on the VIX. So these down markets are the best markets to make money in. I mean, look at this. You got markets moving anywhere from almost 2 to almost 4.5% in a day. These are the best markets to make money in. So the novice traders out there, they understand how to make money in the up markets, but the only thing that happens is they lose money in the down markets. This is where education is key and important. So here's the S&P. We'll start here on a daily time frame here. On the daily chart here, you can see this is the action that's taking place right now. This is our uptrend, higher highs, higher lows. You can see this kind of slowed down here. We had that explosive move, right? And we hit our supply level that we put out there from the 4-hour time frame. We've come down 1, 2, 3 days. So we're coming into this area of this trend line down here that's proven to be very solid. We're gonna have, right now we're coming into daily demand at this point in time. We've got a little demand zone just below us here, but ideally I'd like to see the lower one. So these are coming up from the 1-hour time frames here, right? So on the 1-hour chart here, this is the demand zone that we're approaching. This is a proven demand zone. There's unfilled buy orders here of institutions. We've been here once, been here twice. We came into a little deep here, so that's going to weaken the area. And that's where this play right here is going to be phenomenal. So this is actually the demand zone here. We've reacted off it, come off, reacted off this again. And this is coinciding right here with the trend line, which kind of creates a greater stack of probability, stack of odds in our favor. And that's what trading is stacking the odds in your favor. So we're looking for the market to get a little lower. 30-60 would be kind of ideal in my books right now. And we'll kind of look at the markets at that point in time, and we'll assess and see if it's a good time to go long. Right here we got the Russell 2000 on the Russell, third day down, coming into daily demand right now. Ideally, what I'll be looking for on the Russell is this lower area, So Russell is strong on the way up and weak on the way down. Now you can see the Russell here has got nowhere near the highs, where S&P was up near the highs, and the Nasdaq is new all-time highs. Russell 2000 nowhere near it. Now the Russell 2000 is the leader of the markets. It leads the way up and it leads the way down. So this is where we haven't seen the strength come into the markets, and this is where all the people that are bullish, looking for the markets to go up, are gonna be wrong. Right? We're looking for a longer term down in the markets, not just yet, but longer term down in the markets. So here's the levels we're looking at on the 1-hour time frame. Here's this little level here, proven demand zone right here. We've come into this and getting a reaction. So ideally, what we're looking for is either back into this area here, or this area here to the jumping on the short. Now just out of education purposes, right here is what we call a head and shoulders formation. And so this here is the neckline right here, and you can see it's bouncing off to the upward direction here, bounce off. So this is your left shoulder, this is your head, this is your right shoulder, this is your neckline. So left shoulder, head, right shoulder, neckline through here. Now you break the neck, you'll fall the measurement from the support area here to the top of the head. So we've already, that's already taken place, wiped out this demand zone here, and we're taking a nice fall. So We're now in a nice move, retracted move to the downside, and we're going to get back down to this trend line area here. So that's ideally where we're going to be looking at, this little demand zone in here on the 1 hour time frame to be able to participate in this market back on the long side. On the Nasdaq has been strong. So strong it broke above its upper trend line here. This trend line is extremely important. As you see right here, we had the reversal here. We dropped below it, came right back into that trend line, got denied, and boom, down we go. Right? And it's just been super strong. Like pushed markets to the downside, to the downside, to the downside, to the downside, and then we broke through. So this trend line is heavily based on mathematical calculation of institutional activity. So now what we're looking for is the retracement to this trend line in here. So we've got a demand zone coming in that coincides right with that trend line. It's just going to see what's going to take place here. Let's come down to the 1 hour time frame so you can kind of see where that trend line, where the demand zone is coming from. And it's just coming off this pivot here. So this is an early morning pivot. This is 8 o'clock in the morning. This is 9 a.m. market takes off. So this is right in line with that trend line there. So that's stacking those in our favor. The next one is down here. This is a proven demand zone. And this would, to me, would make a little bit more sense, is getting a deeper retracement on this and then moving to the upside. So for all the traders out there that are looking to get long Apple and Amazon and Netflix and Facebook, you want to be watching the Nasdaq futures here to indicate when do you go buy those stocks. Now you're looking for those stocks to also be in a demand zone to stack the odds in your favor. Coming over here, there's Apple, big move to the upside. Apple is going to be opening this morning at 347 there, 347-ish. So Apple is looking to open right around 347. Now if we open below 347, around the 345 mark there, before right 9:30, this would be then looking at an island reversal. And island reversals are extremely powerful indications to a downward move. Right, so 347 is not going to achieve it, but anywhere around that 345-ish mark, right, that will create an island reversal. And that's something to keep an eye on, keep a look for, because that'll be a great short on Apple, and that's trading in the downward direction. And not a lot of people are going to agree with me there, but here's oil. Right, oil's just broken through a little demand level here. Now this went deep in that demand zone. There's no unfilled buy orders left there, so it's breaking to the downside here. Oil needs a good retracement, and remember during the week we said oil for retracement to get involved with Exxon, right? And this is going to be beautiful. And then we're looking for that play on Exxon to get involved long term. So we need oil to drop to get Exxon to drop, so we can get in at a nice low discounted price on Exxon. And Exxon's paying a huge dividend, and it trades options, so we can get a triple income strategy. So in here, long-term area of consolidation, not too interested. Down in here, proven demand level right here, proven demand zone, just right in there, around 36 bucks. This would be the first area we could look at as an indication. So just oil on the daily time frames here. Oil does need to, ideally would be around the 34 area there. 25 would be phenomenal, but don't expect that. So coming right through around the 32.50 mark. 32.50 mark on oil will be a great area to get involved. Right? And finally, gold. Gold has gone from the low end of our range of a buy area here into the top end of the range here. There's a supply level there that we hit this morning. It's dropping, just hitting demand here. Gold, with the markets dropping, you can look to get long gold, and we could go right through this area and come all the way up into the upper range up here in the 1770s. Have a phenomenal day in the markets. This is Dale Sucker with the Trader Boys. Look for those retracements. Start to look for your opportunities for those that only understand how to go along the market for the upside transactions. Don't jump the gun too early.